Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a financial agreement that might make you think, is this company building a fortress or a house of cards? Stick around to find out. In this video, we're looking at Golub Capital Private Credit Fund and a new credit agreement they've entered into. This isn't just routine paperwork, it's about how they're funding their operations and what it means for their future. We will analyze their financial obligations and see if they're positioned for success or if they are in troubled waters. Before we get started, if you find value in turning complex corporate documents into simple insights, subscribe to Corporate Decoder, join our Discord channel, the link is in the description below, and let's discuss business and investing together. This is a Form 8K filing, also called a current report. Companies use this form to announce major events that could affect investors. In this case, it's about a new credit agreement. The event being reported happened on May 9, 2025. This tells us something significant happened that day that the company wants to quickly inform its investors about. The report is for Golub Capital Private Credit Fund, a company incorporated in Delaware. Their main office is in New York City, and you can even see their phone number here. These are the basics, but let's get to the interesting stuff. Here's the main event. On May 9, 2025, GS Red Funding LLC, which is owned completely by Golub Capital Private Credit Fund, entered into a revolving credit and security agreement. This agreement is with lenders, Bank of America, and others. It's called the Bonner Credit Facility. Simply said, the company is securing a loan from Bank of America to use as they wish. Under this agreement, the lenders have committed to lend GS Red Funding up to $500 million. That's a big number. This is a revolving credit, which means they can borrow, repay, and borrow again as needed, up to that $500 million limit. The period during which they can do this borrowing and re-borrowing started in May of 2025 and goes through May of 2025 and goes through May of 2028. They can't take out new loans under this agreement. The credit facility matures on the 6th anniversary of the start date, meaning the loan needs to be fully paid back by then. The interest rate on these borrowings is based on a floating rate tied to something called 3-month term SOFR plus an additional margin. This margin is based on the type of investments the company holds and can range from 1.70% to 1.95% per year. In short, the interest they pay can change based on market conditions and the assets they have. There are also some fees involved. They have to pay a utilization fee based on how much of the credit they haven't used. Additionally, if they decide to reduce the amount of credit available, they might have to pay a reduction fee. The credit facility is secured by all the assets held by GS Red Funding. This means if they can't repay the loan, the lenders have a claim on their assets. The company also has to follow certain rules, provide reports, and meet other requirements that are typical for these types of credit agreements. The borrowings of the company, including under this Bonner credit facility, are subject to the leverage restrictions contained in the Investment Company Act of 1940. This means they can't borrow too much relative to their assets. This section simply states that the information about the credit facility in the previous section is also relevant here, as it creates a direct financial obligation for the company. This section lists the exhibits filed as part of the report, including the full credit agreement. If you want all the nitty-gritty details, that's where you'd find them. Now, let's step back and see what this all means. On one hand, securing a $500 million credit facility shows that Golub Capital Private Credit Fund has access to capital. This can help them grow, make new investments, and manage their finances. On the other hand, it means they're taking on debt. If their investments don't perform well, they could struggle to repay the loan. This report was signed by Christopher C. Erickson, the Chief Financial Officer and Treasurer of Golub Capital Private Credit Fund, meaning that he is responsible for what is written in it. So, what's the verdict? Golub Capital Private Credit Fund has made a big move by securing this credit facility. It gives them financial flexibility, but also increases their risk. What are your thoughts on this credit agreement? Do you think it's a smart move or is it too risky? Let me know in the comments below. If you found this analysis useful, hit that like button and subscribe for more Corporate Decoder deep dives. And don't forget to check out the Discord channel in the description below. Thanks for watching and I'll see you in the next video.